This is the London Fintech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman, and this is the London Fintech Podcast, episode 240, brought to you in association with Smart and the listedboard.com. And I'm delighted to be joined today by Stuart Cheetham, founder and CEO of MQube and MPowered. No doubt he will differentiate for us in the show the difference between the two companies, but they're in extremely adjacent spaces. Their claim to fame is mortgages in minutes, not weeks. I think that's fairly clear and fairly straightforward. Super fast mortgages sound interesting and no doubt are challenging, and apparently somewhat of a new thing over here, although more of capital A, capital T, a thing in the United States. So, without further ado, plenty to talk about, so let's get on with the show. Good morning, Stuart. Thank you for joining me on the show today.
Morning, Mike. Thanks for having me.
So, when we were talking about things to talk about more interesting than fintech, like many a founder, or in your case, a double F, like many a founder and a father, and probably an H, a husband as well. There's next to no time left for life outside that, or rather, once one's in those circumstances, life is founding and followed and husbanding and that kind of stuff, and occasionally calling your parents. But you were saying that talking of life and the flow of life, and quite adjacent to your day job, you decided to move house. What made you do that? And is there a housing market in the UK? Because the liquidity seems to have dried up and prices are drifting down.
Yeah, well, it's certainly an interesting and challenging year in the housing market, and maybe we'll touch on that. I mean, no, in my situation, yes, I'm married, a father of three, and we've had quite a nomadic lifestyle. I used to run banks in Asia for Lloyds Bank, and we came back to the UK, and we've been hopping from one place to another. So this, at last, to the joy of my wife, we've decided to settle down roots and to buy a house. So it's been quite an interesting experience for me to actually go through the whole process. Right in the middle of it, I'm due to exchange contracts next week in the process. So I've seen firsthand how the market's working right now for me. And
the market is very thin. Is it soft? I mean, obviously it varies as a whole, but as a generalisation.
Well, it's definitely slowing down, and house prices are coming down. I've been following the market around. I live in Farnham, and I've been following that market obviously quite closely, and it's clearly coming down. But it's not as linear or as you would expect it to be. You know, different houses are going still quickly. Some are going through asking prices. Some are going for discounts, and some are just not selling at all, actually. And it all really shows you how much that market and the housing market affects all of us, and it's a very individual thing. So we hear these very generalistic headlines of crashes and stuff like that, and sometimes that's true, and it's just sometimes simply isn't true. The world's obviously much more complex than that, and that's certainly my experience in the last few months.
Yes, and I remember back in the early days, I got bored of this whole narrative of can computers do it, or do you need a human being? And unsurprisingly, American businesses at conferences were very keen to say the computer could do everything kind of stuff, and the Brits, whether it's sort of credit rating or house valuation or something, were very keen to say it isn't. But of course, the question is entirely lacking context, and for a lot of the housing market in the UK, not including the modern shite where they put 1,000 Lego blocks into a field to do an insane sort of trying to turn us into Coruscant, and a very ugly Coruscant of that, as in my avenue. Every house is completely different, and we'll come back onto that in terms of your mortgage thing, because I suspect if you were doing some, I don't know, I don't want to insult people, one of my listeners of a random town in America, but pick a town where actually you've got some road and there's 1,000 buildings in and they're all virtually identical. That's a little bit easier for your computer to do it on its own. But just so that you don't sort of steer me immediately into the fascinating world of mortgages, which I think you've done already. So whereabouts in Asia were you nomading?
Oh, well, I had a great time over there. So first of all, I was in Japan for about 3.5 years.
Which years were they? Were they post-crash?
So this was I just went out pre the financial crisis, actually. So I managed Japan, the bank in Japan for Lloyds, through the initial part of that crisis. Then latterly, I then moved to Hong Kong for about 4 years, and I managed the rest of the Asian businesses, about 5 different banks, all the way through all that crash period of time. So it was quite an interesting time to run banks.
And which crash are we talking about in passing? Because there have been lots of them.
Yes, 2008. I was referring to them, the last big one.
I see. No, I was referring to, and it's just a funny thing how language can mean many things, again, depending on the context, which will be perhaps relevant to your main course topic. But no, I was more referring to whenever it was, the late 90s, when the Japanese stock market tanked. And roughly speaking, flat for the next 30 years, that crisis. Although the 2008 one was also, as you say, and probably an interesting time to be a CEO of a banking subsidiary.
It was a great time, actually. I really enjoyed those roles out there running businesses, even in very challenging times, managing through the cycle, and again doing this in really unique cultures, both in Japan and Hong Kong. These are fantastic jobs. I would recommend to everyone the opportunity to go and work and live abroad is a great experience, not only for work but just for a life experience. It's been one of the best things I've done.
Absolutely. Well, as listeners will know by now, because I mentioned it once or twice, Bridget and I are looking at sort of escaping the sinking ship that is the British Isles. So we haven't actually lived abroad, although we've done lots of businessing abroad and travelling abroad. But then we're looking at sort of moving abroad a bit later. So things can be done in many ways. And one of the fascinating things was, one reason I was trying to decline the offer of talking about moving house and all that was that it seemed too much of a sort of promotional audio, not a promotional video, promotional audio for, and I used MPowered MQube, and you know what, their service is absolutely amazing. But you were telling me apparently that, irony of ironies, you were founder of a company doing super speedy mortgages, ain't allowed to use your own amazing invention. It's like, I don't know, it's like inventing the motor car and some regulator or something saying, oh yes, but you have to use a horse because you've got a commercial interest in motor cars, haven't you?
Well, it's not an unusual thing, actually. So if you're running a lender, and as I do here, I run 2 businesses. I run a technology business and I run a regulated mortgage lender. So typically as a sort of a director and, significant shareholder, you're not allowed to take commercial or, loans from that business, because there's a conflict of interest. And there's been lots of examples in the past where people have done this. So it's actually written into the articles that I'm not allowed to have a mortgage from my own business. So therefore, I have had to go through one of my competitors, so to speak, to get my mortgage, which has been a very interesting experience, let me say, because it's certainly not been a straightforward process for me.
Excellent, or not, as the case may be. So in terms of your career journey, you mentioned that you were Lloyds banking for some time, far, far away. And then leading up to MQube, MPowered, as you say, there's one's a tech and one's a whatever. Maybe you'll just explain a little bit more about the sort of the latter stages of your career journey in terms of what it was that led you from, as I always put it, having a proper job with status and money and these kind of things that tends to keep families of many children and wives very happy, to the conversation, which is always an interesting one, where you say to your good lady wife, have I got news for you? I've got this great idea. I'm not going to give up this. Going to give up this status. Going to give up the Rolls Royces. Going to give up the mansion. Going to give up all the money, and we're going to live in a cardboard box. But don't worry, because I'll make it all back again one day. Honest.
Yes. Well, I'm not quite sure we had that quite a lifestyle, anyways.
Surely Lloyds Bank pays enough for Rolls Royces.
Well, I was, let's say, on the retail side more than the investment banking side, so I always plead poverty then. But no, obviously, I've been very, very fortunate. I've had some fantastic roles. I'm in kind of a unique position. So I've been a chief exec of a bank, and I've run end-to-end banking businesses, multiple banking businesses in highly regulated environments, and now I run technology business and a regulated lender as well. And there's a very stark difference between those, just culturally and from a people point of view. So, what one is, very bureaucratic and highly difficult to change because of regulation and culture and people and things like that. And then you move into fintech, and you kind of ensure that you can't have any of those blockers in place. So one benefit of having a startup and a fintech is agility and speed. So, I ban Gantt charts, I ban project plans. These things Brilliant. Are simply not allowed in this business, because they're an unnecessary administrational evil that slows you down in change and stuff. And so you can imagine a huge difference between the type of people that work in these businesses and the way that you work these businesses. And I've been fortunate enough to do both. Equally challenging, both interesting, but very different.
Excellent. So in terms of what led you personally to wake up one morning and go, oh bollocks, fuck it, let's do a startup. It may not have been a moment of sort of waking up and falling out of bed and it sort of suddenly comes to you. It may have been a process over time. Was it the fact that, and something I've experienced, which is, for the sake of argument, I used to think of this back in the day as eventually one stage in my life when the Times was the Times, which hasn't been for decades since Murdoch took it over, I was able to do the crossword, but I was able to do it the next day, and that's why actually I left tech, because I could tell the computer to say hello world, and it would keep doing that, and the computer didn't change that much. Technology was slow in the past. And it was something, I thought, I know how to do this now. And my kind of boredom threshold kept me throughout my career doing something until I could, thought I'd sort of relatively mastered it. Not that any of us master life, as it were. But I got to the stage where I thought, next year is going to be pretty much like this, and I've done it for a few years now, and I wanted to move on. Was it something like that, which is that you thought, actually, by the time I'm 75, I'm a bit late to be a sort of an entrepreneur and start up sort of fintechs?
I mean, the one good thing about running your businesses in Asia is actually they're about as autonomous as they possibly could be within a bank. Now, that doesn't mean you are autonomous, but if you're 8 hours time zone difference from your boss, you've got latitude, particularly if you're running something in a financial crisis as well. You're forced to and made to make decisions. And this is a great experience, and I loved it, to be honest with you. And then when you come back to the mothership, what you find, you become a small cog in a big wheel, and you become an expert in your silo, and you do whatever you do in your silo, where actually I had a very generalist and broadened skill set and knowledge, and it was just more intellectually interesting. So I became bored quite quickly and realized that actually if I wanted to kind of keep myself challenged and engaged in a career, I had to do something more interesting. And in that regard, I decided that I would start up my own business, and I met my business partner who was in a similar role, but we did not have an idea of what we were going to do. So we literally had a blank piece of paper, and we started to look at the marketplace to see where did we think we could make a difference. And we looked at fintech because we were both from the financial markets naturally. We could see sort of a sea of red in payments and these types of areas, and what value would we add? And then when we looked at lending, we started to see some clear blue water, particularly when you got to complex and highly regulated lending like mortgages. And actually, we saw there was very little innovation and development in the last couple of decades in reality, and certainly the borrower experience had not changed. And therefore, we came homed in on this, kind of go, why is that? That seems so bizarre to us when we looked at it with a fresh pair of eyes, and we said, this is of interest to us. And so it was a very kind of rational approach. It wasn't this kind of eureka moment. I couldn't get a mortgage and I was so pissed off with banks. I had to do something to change the world, which is the normal entrepreneurial story you'll get. Mine was a far more rational, targeted approach, looking at the market like that.
Interesting. Well, I'm pleased to hear that story, because often you do get this sort of the origin story. I was on holiday and I couldn't X, and therefore I decided to X myself. And it's interesting actually, because culturally, I've seen many people come back from being expats far, far away and do some kind of shift in their life, because the stimulation of being far, far away, surrounded by people of a very different culture and all that, and a very different environment, is, if I may say, with no disrespect to the natives of Farnham, more stimulating than Farnham, where you can kind of understand where everyone's coming from without making any effort. And I think the other thing which is important there, of course, is that you weren't exactly looking at the blank sheet of paper, because if at the top you got something to do with banking or whatever, you knew quite a lot about the landscape already. And I think that the people who do go astray go and think they want to be an entrepreneur. Well, that's fine. And they think, I'll go into restaurants. How hard can it be? Well, if you ain't been in a restaurant, pal,
it's pretty hard.
It's pretty bloody hard, and you don't even know it. I mean, it is being in a different territory, in the same way that being in China or in Japan is a different territory. So you had that advantage. Okay, so When was this formed? When was this formed?
So we started about 6 years ago, and we formally funded the business about 4.5 years ago. And you're absolutely right, Mike, because you look at this, you need to kind of, anybody who thinks about starting up a business, or doing something like that, you need a true north and a steadying part of it. Because the reality is there's so many unknowns out there that you will get lost quickly. I mean, the learning curve is so steep and so quick, and it's so different from a corporate lifestyle. I mean, it's an obvious statement, and everybody says it, and all I can say is really, it is big. And until you've experienced, you haven't. So having a true north there is really important, because you're going to have to learn how to deal with investors. You're going to have to deal with raising money, debt and equity, and all these sorts of things. These are all becoming new experiences for a founder, all of which is great. But again, you want a solid skill set that you can build on. And that's exactly what we did. We were both bankers and both experienced at running those type of businesses.
Excellent. Well, in terms of one of the things you've done very well, which may come back to your CEOing days, is have a very simple and very clear proposition that you could tell the bloke next to you in the pub or on the train, or tell your mum, and she would understand it. Like, oh yeah, what you're doing, son? Oh, I'm doing a company that's going to make mortgages faster and easier. Oh, okay. And many, the vast majority of fintechs couldn't tell their mum or the bloke next to them in the pub. So I think the listeners out there, we can understand the words faster and the word mortgage, so we don't have to, as in some products, dive into what the bloody hell is that. So let's just start actually with the commercial landscape. So fintech as a whole, you may have noticed this, especially having a technology company as one of your companies. Fintech as a whole is about using technology to do things faster. And your story about having the latitude in the Asia, I laughed because I remember that back in Kleinwatt's days. You'd come into the office in the morning and the buggers would have done something using quotes, I mean air quotes here, using their initiative,
yes.
Which was sometimes good and sometimes not what the pandorandums in headquarters had wanted, funnily enough. But also I was laughing because back in the day, way back in the day, when this sort of Asian business from Britain started, through East India Company, you'd send a letter home, and they'd send we're thinking about doing this. And they'd send a reply. Well, the bloody ships would take... It took about 18 months to get a reply. So that was real latitude. That was real latitude in the day, which you did have to report to headquarters, but they wouldn't give you an answer for 18 months. At which point you'd send the reply saying, oh, sorry, no, we did this anyway. So anyway, you can be a founder these days, and they were entrepreneurs. So commercial landscape, and I recall when we were prepping this, me saying, well, yeah, okay, doing things faster. Yeah, I think I've heard of that in the last decade, using technology. And mortgages, I've definitely heard of mortgages. So, yeah, okay, but hasn't everyone else done that kind of thing? So what does this fast thing mean in the moment? And are there not a million people already selling super speedy mortgages in the UK?
Yeah. So unfortunately they're not. But let's be clear. So I think fast is a bit of a red herring. It's kind of a good word. It is there for the marketing. But does anybody really need a fast mortgage? And if so, how quick do you need it? So we've done lots of consumer research, and in reality, they don't use the word fast, they use the word certain. What we want is certainty in this process. So, buying a house is probably one of the top 10 most stressful things any of us will ever do. It's very emotional, it's very costly, and it can cause a lot of stress and angst, as I well know, because I'm going through this process as myself right now. And so really what you want to do is give people certainty and reassurance all the way through that process. So that by giving people a mortgage offer and allowing them to go through that process simply and transparently takes that stress away, it takes that uncertainty away. Now, to deliver certainty, in reality, what you have to do is to do that quickly. It's almost a derivative of speed. So they go hand in hand, but it's important to say, people, I don't believe in fast mortgages in that sense. It's not the benefit that I think consumers want. It's the certainty and the control that they have is actually what they're really looking for. And it's a very important distinction to make.
Right. Okay. So most of the listeners are not in the UK, so haven't experienced the nightmare of the UK property market and how it works in terms of offers and completions and all this sort of funny stuff. But just simply as far as the mortgages are concerned, for people with no experience of taking out a UK mortgage and not using yourselves, if you just go to the market in general for a mortgage on a house in Farnham, say, what is the, shall we say, median decision time For the sort of top dozen providers of mortgages in the UK, is it a day, a week, a month, a year? I mean, back in the day, I remember my folks moving in the 70s, it was 3 to 6 months. It was that long. There was the mortgage queue, it was called.
Yeah, absolutely. I mean, so it's 19 days. The stats are surveys out there. They're published this data at the moment. So that the typical time, if you like, is 19 working days at the moment in the UK. So what's that? Just somewhere between 3 and 4 weeks.
Or 2 and 3, depending on how you do arithmetic.
Well, exactly. Also, everybody's experience is slightly different as well. So, but I mean, there's two moments of truth. So a mortgage is a necessary evil to buy the house of my dreams. I'm not buying a mortgage. I'm buying a house. I've just got to go to this annoying bank to get some money to enable me to fulfill my dream in this process. And there's two moments of truth for a borrower. The day I know I've got my house, and the day I move in my house. Everything else is noise between that. Now, the problem is the day you know your house in the UK, it's typically when the house is taken off the market and you've proven to the sellers that you're a good buyer. Typically, that's when you get your mortgage offer through that. So immediately you make an offer on this property, and if it's a hot property, there could be lots of people bidding for that property. Immediately, then there's a massive rush to get a mortgage, and you don't really know that property is off the market until that mortgage offer comes out through that process. So it's that stress and uncertainty of this period of time that we're trying to fix and solve within this business.
And so if the market as a whole has got a median of 19 days, what is, roughly speaking, the median of you folks? So
today we're currently running at 3 days.
Which is somewhat less than 19.
Which is less than 19. That's congratulations, Mike. Your maths is excellent. And I mean, again, and what's unique about our business is, and we might get into this later, we use artificial intelligence to do lots of this stuff, but we do this in a very highly regulated world. So actually using this technology in a highly regulated world means you can't just deploy it, switch it on, walk off and hope it works. You need to know that it does work. So what we do is we release technology in a very systematic, controlled process, proving to us in the market that it works. So we run at 3 days at the moment, but in reality, sort of within the next 12 to 18 months, we would hope that about half of them will be done in a few hours.
Right. Well, being a bit looser with my mathematics, that is getting on for an order of magnitude improvement from the marketplace, which is certainly substantial. And you're just in the UK at the moment?
We're just in the UK, and so just to sort of put in context, there's two businesses. One is MQube, it's a technology business, specialises in artificial intelligence, and MPowered Mortgages is a regulated mortgage lender in the UK. And so therefore, that is now deploying MQube technology to create this new experience. MQube itself will have an international focus, and we will move ultimately into Europe and then into Asia.
Right, okay. So just sticking with first things first, and in terms of the UK, and just from a sort of computer perspective, if you've got all your input data and you've got your transformation function, it doesn't matter what clever computer program you use, whether it's called AI or whether it's called Excel or whatever, it should be, quotes, able to take all of the data which is necessary for any good decision and give you its computation, which will be a yes and a no and something like that. We've done speedy credit decisions and all this kind of thing many times, as you can imagine. So there are simply two things there that really we need to look at, is the input set of data, and then, of course, the sort of transformation function and that whole sort of thing in terms of getting the computer to spot patterns ever better and outperform individuals' own credit assessments. We've touched on once or twice. So with the mortgages, and having said that the UK is a very heterogeneous market and also a bit of a sort of strange market with this process, the first challenge is clearly having all the data. I mean, for example, if all the data you need, and I'll explain the thing that you and I know, but some listeners will not. If all the data you need is available, I might want some mortgage. You go, have you got your data? Yeah, here it is. And it's validated somehow. You go, oh right, okay. Then that is the weakest link. The thing that's going to take the longest is getting the data. Now, one of the data, which is, let's just take a key example, is not just the sort of the address of the house, which you can probably then find on Google Maps and stuff like that. But in the UK, you have this thing whereby every house buyer has to get this thing called a survey done. So you have to pay whatever, 500, 2,500, whatever it is these days, or whatever size of your house. And you get some person to go around and go, oh yeah, well actually you do realise there's damp over there and the roof's got holes in it, and go, shit. And then commercially you use that to negotiate with the buyer to change the price and all that kind of thing. So one of the biggest hurdles in terms of rapid decisions is presumably, and I think in Scotland it may be different, and you have a survey associated with a house. In other countries may be more rational, which is like, I flog my car and here's the MOT document and here's the service history and all that kind of thing. Now, if I'm flogging a really vintage Rolls Royce, you might have an engineer to check it out and see how good it is. But in general, if I'm just selling a sort of fairly generic car, the information comes with it. In England, England and Wales, the information doesn't come with a house. So just on that particular quirk of the UK, presumably the weakest link in the chain is that you as a mortgage lender need to know what the survey says, because if the survey says the whole bloody thing's falling down, you go, oh shit, maybe we shouldn't lend on this one because the surveyor said it's going to fall down the week after next. So let's just talk about the survey thing, and then we can talk about all the other data needed to make a credit decision.
Yeah, okay, fine. Yeah, and you're absolutely right there. So, and I think, and just before we dive into that one, I think what's important to flag right now, what is actually the problem in the industry and what are we trying to fix? Making fast decisions is not very difficult, to be quite frank. There's decision engines out there, and if you put the right data in, it can turn out a decision. It really isn't that complicated. The problem is so much data needs to be entered into it. It's never correct. It's never consistent. So you get a garbage in and garbage out scenario. So what we have done is fix the garbage in and garbage out scenario. And I'll come on to that in a minute and how we do that. But you're right. So in the marketplace, there's three types of survey that you can do. You can do a digital one, an automated one. You can do a desktop one, or you can do a physical one, which you've alluded to. About half the time at the moment, a physical survey is done in the marketplace. These are broad brush numbers. So therefore, and then the other half is either digital, therefore it's instant, or it's a desktop, which is a couple of hours. And this is somebody sitting around looking at comparable models behind the scenes. But it is typically an SLA of two to 3 hours to do that. So half can be done without that physical survey, and half do require that physical survey. And when that physical survey is required by the bank, the borrower wants that. It's really important to remember that they're buying a house. It's typically the most expensive financial expenditure piece they want. They want to know as well there's no damp and there's nothing wrong with that property. So what we do in this situation, it's about control and certainty. Yeah. So what we're trying to do is create this experience where basically, imagine how you might buy car insurance on an aggregator site today. You do something for 10 or 15 minutes and immediately you get presented with a number of offers. You choose one and therefore you complete that and you're insured. But then you might need to do a no claims bonus afterwards, supply documents afterwards. It's very similar. What we do is we get people through that journey in a super fast way and we give them notification that they're financially underwritten. So you know that actually you can have that mortgage of that amount for that property. All the checks have been done. The only thing you're waiting for is that physical survey, which, by the way, you want that to be done properly as well. And therefore, the certainty is increased for them. They know where they stand. They might need to wait another 3 or 4 days for that to come through, but they're in that position. If you're in the other half, where you've got a digital or a desktop, you still can have that decision in the same day then.
Right, okay, so I get that. And interesting stats, I didn't realise that 50%, the number is 50%, because of course, back in the day when I bought houses, it was 100%, because there ain't no digital surveys, because there wasn't.
No, exactly. It's
no digital. Yeah. Life was simpler in a way. But in terms of the simple picture we did on the whiteboard of data in some transformation decision function and then an answer out, like all simple things you scribble on the whiteboard, reality is more complex than a few straight lines. And one thing that occurs to me in this context, perhaps, is that, let me say I want a mortgage from you and I want it for sort of fairly quickly for whatever reason. And you say, well, actually, if you want it quickly, we can do a digital survey and that'll take sort of 57 milliseconds and we'll give you an answer in 5 minutes. But, and this is where it interacts with the decision, but we can only give you a loan to value of 60% because you've got to allow yourself more fat for the fact that maybe the digital survey hasn't thrown up the fact that it's got some damp that wasn't there for whenever it was up. Or, if you want a sort of like 99.999%, which you won't get, of course, but anyway, metaphorically speaking, mortgage, then actually we will need a physical survey. So is there an interaction between the decision and the quality of data you're getting up front?
That's kind of a different type of product process. So can that be built? Yes. Is the data available? Could we build that? Yes. The problem in the process is it's a highly regulated advice process. So by the time people have got to us, they've gone through, we work through brokers. So therefore they go to a broker, get their advice, and they've already made these decisions. And typically what borrowers are doing is the latitude around their loan to values is typically limited most of the time, because most people stretch themselves to try and do this as it's just a natural thing to do. So could it be built? Yes. Could you actually execute that in the current regulated advice process? It would be more difficult to do that because of the lack of connectivity in the schemes. But it does happen in some regards. Yeah. And typically for a borrower, again, this goes back, speed is not the right word to use it. Why do I want a fast mortgage? Well, it might be because I'm under pressure because I've got a discount on that property, I've negotiated hard, I've got to act like a cash buyer, and there's a really good example. Or a first-time buyer buying a development, you've only got 25 days to complete, and therefore there are moments like this, but most of the time it's all about certainty. Yeah, most of the time it's just about taking all the stress and hassle away.
Yes, I get that, and as I say, it was more of a sort of scribbling on the whiteboard question about the interaction between the quality of the data and the quality of decision, and where you have loan to value things as a banker, you can always trade it off. So let's take a simple example. I mean, as you can imagine, being a podcaster, you're even more than CEOs of banks abroad. And so I'm buying some mega mansion and I only need a 10% loan to value just because I want a bit of cash flow. Well, 10% loan to value, taking just a Gdanken, a 10% loan to value, you don't need that much certainty around the thing to realise that you're not taking much risk, because the chance of it falling down completely, well, the building's insured anyway, as long as it's insured, which you require anyway, or the chance of the market tanking 90% is an extreme case. It wouldn't happen. Anyway, okay, well look, so we've banged on a bit, I've rather banged on a bit and pushed you to bang on a bit about the survey, and perhaps that's a large anomaly of the UK and doesn't apply elsewhere. So let's move that to one side. Let's now go back to talking about the data in general to make a lending decision in the private housing market. Just at a sort of relatively high level, what are the challenges there? If I decide to go off and do it even better than you're doing it today, what are the challenges I'll face there in terms of getting all the other decisions, all the other data I need to feed it into my computer so I can get the decision?
So, I mean, the challenges there is a lot of data coming through, but actually it's very predictable what level of data you want. You want to know someone's expenditure, their income, their creditworthiness. Can you prove their, who they say they are? So this is all very predictable stuff. But, but when this data flows through, it comes through manual entry, APIs, and through documents. And the combination of those things creates inconsistencies. So a simple example might be on your pay slip, you might have a gross income and a net income, but in between the two, 5 or 6 lines, which could be variable pay or a variety of different things. And the lender needs to understand what those are. And therefore it becomes quite difficult to be able to understand that level of granularity and detail within this. And the key thing around that is, so therefore, so what happens is somebody will fill in an application form, take them 2 hours to do that, put some documents aside, submit that into the process, and then over the next 4 weeks, the lender will ask them questions to clarify the data, to make sure it's consistent and correct. And that's what slows it down. What we do is different. When you're actually doing our application form, it takes about 10 minutes, our application form, we collate around 19,000 bits of data in that 10 minutes.
Do you have people who apply who can write very quickly then, or do you source that data from somewhere else?
So as you type in the property, for instance, immediately we'll take 1,800 data points on that property to value it and to contextually underwrite it. And then we'll say, if there's a missing piece of data, we'll then ask that in the journey. So our 10 minutes is filling in the gaps, not asking people to repeat the information we've already collected.
I see. So in a sense, you've got a very long form, but you've got a very clever autocomplete. So if I'm online and I'm buying something and I stick in, my postcode, it's already narrowed it down a lot, and then I do one drop down and that's it. Or, as I had a nightmare doing yesterday because I was buying various things, flights and stuff, there's some bloody drop down of every country in the world, and it's either United Kingdom or it's UK or it's GB, and I'm scrolling up and down for ages, which is a poor interface. Just in passing, as a curiosity, so I type in my address, let's say I'm buying my own house again for some strange reason. Where on earth do you source 1,800 data points about it? I mean, I know there's lots of data in the modern world, but what the hell are the 1,800 data points on the average house in just outside London?
So we how many bathrooms you've got, kitchens and bedrooms, freehold, leasehold, flood risk, crime.
Source of that is what, or is that sort of a secret?
So we have built a variety of APIs that comes into our own pipeline behind the scenes. So we can go to the land registry to check if there's a charge, who's that charge with, all those sorts of bits. We can look at future development. Is there a railway line being developed next to it? Where's the nearest river or flood risk? How close to an airport? How close to a cliff? All this stuff is actually available publicly. And we've just collated all this into one area. And what this enables us to do is, because every time you make a decision on property, it's not just about the valuation. Like flood risk is a great example. My house is actually by the smallest river in the world. But anyway, it registers that and gives you a rating of that one to understand if that house contextually you're willing to lend on, irrelevant of the valuation. So we do all this up front. And as soon as something's missing, that's when we ask the question to the borrower. What we don't do, like every other lender, is ask them to fill in 3 pages of the property form, because we've already got all that information. We don't need that. We don't ask you to give us your income and everything. We're reading your payslip or your set of accounts and your expenditure and things like this. We're doing this for you because actually it's quicker and more robust to do it that way. And then we check in.
I see. So it's an easier process, as well as getting the certainty and being somewhat considerably faster than the median for the market. So just to wrap up this section then, because clearly this is something we could talk about for a long time, and I think the way you've presented it is in a very modest fashion because, as you identified, based on your career in retail banking, the challenge isn't, once you've got the data, the challenge is, hang on, this says 7 and this says 4, and there's
Yes.
all that kind of thing in terms of cleaning data, and anyone that works in the data world will understand that challenge and understand that it is never as easy as it sounds from a top-down perspective. So clearly, if you're not getting bust, you're doing a good job of that. But going back to my simple picture on the whiteboard, you need a bunch of data in order to make a decision, and then the decision to lend or not to lend. But the other challenge that you mentioned, and I was a little bit curious about this one, was that, as I prefer to call them, getting your computer to do clever things. But as lots of people say, artificial intelligence, which is fingernails on a blackboard to me. But anyway, using a computer to make the decision, and as one of your businesses is technology, you were saying, and I didn't quite get this myself, or rather I don't know the answer, what particular is challenging about using a computer when you're a regulated business? I can imagine, but maybe just tell us all what the right answer is.
Yes, so using technology obviously as a regulated business is a necessity. What's difficult is deploying new technology to do innovative and different things. So it's changing your processes and changing to new technology is the challenge. So we talk about decisioning. So if you've got all the right data in all the right format and it's all consistent, every lender, all the big lenders, have a machine that will make a decision for you near instantly, within a day or two, very quickly. Their problem is the data's never right. And we never use, for instance, artificial intelligence to make a decision. You don't need to. Take a bit of a gun to a knife fight. You just don't need to do that. We use rule-based engines to do that. We use artificial intelligence to do the human activity before that. So what's happening in all these lenders is you give them your pay slip, and then a human being looks at that and go, well, that's a pay slip, and there's gross pay, there's net pay. Have they declared it correctly? Yes, they have. Fantastic. Here's their bank statement. What we're doing is we're getting artificial intelligence to read all that data, cross-reference that data, make sure it's correct. When it's inconsistent, we use their machine learning algorithms to create a question into the journey to clarify that. Is that variable pay? What is that expenditure piece on your bank statement? Through that process. So we're using it to clean the data, to make it machine readable and consistent at the front. And once it's clean, you can then put it through a decision engine that's highly auditable, completely transparent. So there's no ability to do unconscious bias and all that sort of stuff, which people talk about with AI. And you get into those decisions. So it's about making sure that you use the technology in the right way. But the analogy I use with bankers to tell them about artificial intelligence, it's a bit like if you've got a Mini, it's about lifting up the engine and putting a Formula One engine in it. The chassis just isn't going to hold it. It's a very, very complex piece of that needs intense computing power, and legacy systems just are not built to do it that way.
I see. So in terms of that process, and you remind me of my way more noddy version, but in the late 90s when I founded a Fintech, before Fintech existed, I'm using the management accounts and the information in banks to give you an understanding about the business at a very strategic level and risk returns and that kind of stuff. There was a challenge, of course, around noisy data, which is finance fuck it up one day, put -1 million, and next they go, oh shit, it's +1 million. And as volatility of the income streams was important, I had to do something around that. And I didn't call it intelligence. But in terms of fast forwarding to 2023, and so you're doing this, that sounds fine. So where does Mr. or Mrs. or Ms. or the other pronouns regulator turn up and look at your computer and go, oh, you're not allowed to do that? And that's the bit I'm sort of not finding at the moment.
Yeah, so we're regulated by the FCA as a regulated mortgage lender, and we have to do all the reports and have the right governance structure in place to be able to do that. And we speak a lot to the FCA about how we're using artificial intelligence. And
so my question, to be more specific, what is their particular interest in, let me just say, the algorithms that you're using to clean your data? I don't really see that. I don't understand, because I'm not in your business. I don't understand how a regulator would come up and say, oh, what are your algorithms? Or, what Google Cloud package are you using to clean the data? Or, what was the process of developing your software? What I don't know is how much, and it's ever increasing, as Sir Paul Tucker has pointed out when he was on the show a while ago, I don't know how far the regulation reaches down into the business.
Yeah. So the regulation doesn't work like that. So it's on a principle basis anyway. So what they would do to us is they would create a standard on us to say that we must self-govern ourselves and say that we're making responsible and clear decisions that are auditable. And therefore, we will have a governance framework like any bank would have, like any lender would have, a governance structure that we would be able to prove that we're acting reasonably and safely and appropriately all the way through this stuff. And therefore, they are looking for us to be able to generate outputs to them that proves to them that we are monitoring ourselves and keeping ourselves honest in this process. And that is the way regulation works in this country, because it's a principle-based approach. So, but they will go into detail around how do we use it. We have to help educate them and help them understand how they do that. We have to make sure our governance framework looks at this process, creates the right data and oversight to make sure that we are using it appropriately.
Excellent. Okay, so I understand now, and I see the regulation. And going back to the East India Company, I wish I lived centuries ago, apart from the lack of dentists. Well, not even centuries ago, actually, at the start of my career, when there were no regulators, because people that, it's like driving a car, although they're trying to make that more difficult. People driving cars, unless they're sort of 17-year-old lads or something, people driving cars are heavily motivated and highly motivated not to crash and kill themselves.
Yes,
in the same way,
yes.
People that start businesses are highly motivated, and there used to be this old-fashioned concept, maybe you're just about old enough to remember it, called the free market and business. But anyway, let's gloss over that. Okay, so that's been a really fascinating coverage. We've dotted around a whole number of things. As I say, I think my takeaway is that not only do you explain it very well, not only are your data very impressive about how much faster than the median you're doing it, but also that in terms of the number of years that you've been at this, it's not the kind of thing that someone might start it today and sort of sussed it out by a week's time, because it's harder than you think.
No.
Good. Okay, so before we wrap up the show, I'd like to thank all the listeners out there, my brand partners of the podcast. Smart is transforming pensions and retirement worldwide. The leading edge retirement tech platform propelled them success in the UK. Now they're operating on 4 continents and working with partners like Zurich and JP Morgan. Find out more at www.smart.co. Then listedboard.com, your guide to entrepreneurial governance and how you can start making your board an engine of growth today. So, Stuart, you may have mentioned mortgages and your businesses once or twice in the main course, but going back to the bit at the beginning, excuse me for my lack of memory, but which one was MQube again and which one was MPowered? And maybe you'd like to let the listeners know, respectively, for MQube and also MPowered, what product services they offer to which kind of clients, which of the listeners should be checking you out, toot sweet, and then what do you need more of to be even bigger and better tomorrow than you are today?
Absolutely, Mike. Thanks very much. So MQube is a technology business. It specialises in artificial intelligence. Its customers are banks and building societies and lenders. And we speak to all these people in the marketplace saying that here is a way for you to create a better experience for your customers. Here's a way for getting better data into your business. Here's a way for reducing your cost base through all those sorts of things. So I'm always looking that our customers are those types of people, banks and building societies. So I'm always looking to discuss and connect and share what we're doing in this process for that. I'm a big believer that we are not a disruptor. We're a transformational partner. We want to do this with people in the market, not against people in the market. And there's lots of good reasons for that. It's because it's complex and people have a key role to play. So that's the core focus of MQube. It's an AI business that supports banks and building societies. MPowered Mortgages is a regulated lender. We deal with mortgage brokers. If anybody would like a mortgage through them, we compete with all the top 5. We have pricing that is equal to, or sometimes even better than, the top 5 banks in the country at the moment. And we have a full array of products out there to enable people to buy that. And we're growing that business, proving to the marketplace why technology can help borrowers gain more certainty, gain more control through their mortgage broker over this process. And again, we'll look to grow that as we go forward as well.
And what do you need more of to be even bigger and better tomorrow than you are today?
Key thing for us is we want more banks, more partnerships with banks and building societies in the marketplace. We want to be able to show to them how we can help them use artificial intelligence in a highly regulated way, in a really safe, controlled way within their business that demonstratively improves their customers' experience and reduces their costs.
Excellent. Well, that sounds like a very good idea. And if I was the right kind of person on the other side of the podcast listening to that and only do that kind of thing, I would definitely check you out. And I think that what distinguishes you guys is that you've got a deep personal experience of having sat in the CEO's chair in a banking unit, and therefore understanding not just the sort of stuff you might be taught about on an MBA course about how to run a bank, and you need a treasury department and assets and liabilities. Oh yeah, right, okay. But also actually what it feels there and what the priorities are, and in terms of keeping everybody happy and doing the right thing and moving forward in an environment which can be difficult to change. So that enables you, I'm quite sure, to dock very well on that side with the banks. So I'd like to wish you, MPowered and MQube, every success in the future.
Thanks, Mike.
Thanks for listening. If you're in need of a non-executive or advisory director with deep expertise, experience and contacts in the worlds of both traditional FS and Fintech, or unique insight into how to make your board an engine of growth today, contact me at mike@mikeballiman.com. If you just need one-off advice in these areas, via clarity.fm/mikeballiman.
We could sit in a bender all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moonrise, watching a happy moonrise. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, with the faces so grey, with the pain of the everyday. We are wild like the mountains and the trees. Can you see what I mean? Can you see what I mean? We fit in between the earth and the sky. Kiss the city goodbye, wave the city goodbye, wave the city goodbye. The city goodbye. Watch the firelight dance with me. 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 Watch the firelight dance.